Okay, well, a very good afternoon to all of you. As Ambuj mentioned, this is a conversation about emerging innovative business models, and you're going to hear from three people, Ravi from eSamudaay, Bhavjot from Clinikk, and then Krishna from Arakabata, Agri. So we're going to talk about agriculture, health, and market access. They're the people who are doing the real work, so we'll try to give them more time than we give myself. But I'll just lay out a few questions. Again, these are from the perspective of somebody who has the opportunity to scan a lot of things going on rather than do one thing intensely like running a business. So I'll share some thoughts from that perspective. I have some experience of failing with some businesses and succeeding with one. So I have some first-hand knowledge of thinking about business models also. And so I'll intersperse some of that understanding. But when it comes to sort of the financing models, business models, whereas today's conversation is going to be, we're going to hear from three startups. I think the broader context here is that questions about financial viability are open for at least three different stakeholders. One is startups. Other is the infrastructure for innovation. So there's how will the incubators be viable, etc. That is the second line of sustainability, economic sustainability questions. And the third is how will we attract and retain investors. That is another sort of viability question. So I think that, to me, that kind of is the broader canvas. Underneath this is, of course, for each of these stakeholders, and this was being discussed yesterday also quite a bit, the fundamental question is there enough value created? That's one. Second, is there a way, is there a model, a business model to capture some of that value that was created to come back to this stakeholder, be it a startup or an incubator or an investor? And the third is that captured value at least equal to or greater than the cost incurred? And you may, depending on who you are as a stakeholder, you may think of cost as if you're a private investor, probably you can be more tangible about it and say, okay, what is the actual money coming? You could think about it in money terms. If you are an ecosystem builder, you may think about it in cost effectiveness terms, but there has to be, the return has to be greater than what you're putting in. So that's basically the basic question there, right? Behind this scene, so I'm kind of stepping back, right? So these three actors, the underlying value creation. Behind that is a giant public policy elephant in the room. We are not going to talk about that elephant today, but the elephant is this. That, how will we bring the valuation in line with the value? That big question is there, because this is all about the viability of the whole system, right? So we won't go there today. I think if you want to, we may go there as well. But so then there's the question of for infrastructure, how do you, I'll touch upon the infrastructure and the investor bit because startups will touch upon. So the infrastructure side, you see a lot of experimentation. People sort of have some revenue stream from rentals. They may have service charges. Some are doing revenue share to sort of keep it returns come in short term. Some are doing equity, which is probably in the long run more uncertain, etc. And the question that we haven't really answered here is that which mix of this revenue stream is appropriate for which type of incubator. So we have different types of incubators, and there is people inside their heads, people who are experts, have mental models about what works where, but we haven't really sort of democratized that knowledge. So there's that one open question. Clearly, I mean, an AI, IoT incubator is not a bioscience incubator, and so on. So similarly, there may be incubators even in a space where financial viability is not what one should look for, or certain areas there would always be infusion of taxpayers' money. We haven't articulated that clearly because we ask the same questions to all incubators in some ways. So there's that, right? When it comes to startups, of course, the broad question is, how do I overcome the valley of death while minimizing debt or dilution? One answer startups have given to it is, can I maximize grant by going to any incubator that I can go to? There's nothing wrong with it. Or we have to answer a question, is there anything wrong with it? Is it because our ticket sizes are so small that startups, and the money is easier to get, so startups go to different places? Or should we fix that? Is there something to fix that, or is something to let it happen? Investment models for different classes of startups are also still in people's heads, in experts' heads, but not democratized. So for instance, we know how to fund software startups, but when it comes to hardware startups, it's really extremely tough to be a hardware startup in India. Right? In fact, we tend to bend a software startup into an average revenue per user startup. Should we do that? Is that a reasonable thing to do for the long run? So that's an open question. Also, if you take a tier 1 versus tier 2, tier 3, I mean, clearly cost structures are different, right? So should the investment models be different? I think, again, people like, say, Deshpande Foundation, who are working tier 2, have a very clear idea of what a tier 2 structure may look like. But we haven't really democratized this knowledge, so there's that. On the investor side, and I'll end with this, the overall investment is still in question, right? Think about just one example, which I've been giving in many places, so you may have heard it. Deep tech. Average investment in top 100 deep tech companies is $75 million average. That is more than total annual budget of Atal Innovation Mission. So that's the gap we are talking about, right? Again, I said that there are different types of, we can think of it as from the financial balance sheet lens, that there's a grant, there's the debt, there's the equity. There's some very fascinating experiments going on. Himanshu is here from IP Global SAMRIDH, for instance, trying to do blended finance. So these startups that have a deeper, longer valleys of death can have more options in being more viable, keeping their debt and equity within reasonable limits. So, and then one final question, which is a major question for our country. I don't think others have answered it anywhere in the world also. That when it comes to, if you sort of step back and say, okay, where is the money? Where do I have to get it from? So of course, taxpayer is one money, right? There are other people, individuals with money, and there are these traditional businesses and vernacular businesses, right? These are people who have a lot of money, but they don't have the facility with either the language or the culture of the modern financial markets. And how are we going to engage them? Do we have answers to engage them? So anyway, those are sort of many questions that I see that we ultimately will have to take on if we want to continue to go from world's third largest to ahead. So anyway, with those, let me just say that I think let's go to the more exciting part of this conversation. Let's invite three people who are the real doers, Ravi, Bhavjot, and Krishna. So before we started this, as we were having lunch, we thought that we will probably go in the following order. We will start with Krishna, because agriculture ensures good health. Then we'll go to Bhavjot. She'll talk about health. And then both of them need great market access. So then we'll go to Ravi. So that's the order we'll follow. Each of them will tell their story about what is their mechanism for capturing value, and what are its implications we can explore further. So shall we start with you, Krishna?
Hello? Hello? Yeah. Thank you, Doctor. Yeah. A lot of people call me Satakarni, though the first part is Krishna. I go by the name Satakarni or Satak. All right, see, before we start, whenever you go and meet an investor, the first question they ask any startup is, what is the problem you are solving? But look at agriculture, how many problems can you solve? You know, there are so many problems in agriculture today that, it's like, each startup is trying to pick up one problem and trying to solve it. But what we did is we sort of took a step back and said, there are so many problems, there should be something underlying that can be changed or that can be attempted, which can probably change the structure in the agriculture ecosystem. So what we did is, we looked at it, and what we realized is, while most of the industries, if I want to call agriculture also as an industry, which I would like to, in most of the industries, the production cycle and the buying cycle are aligned. But when you come to agriculture, the production cycle goes on its own tangent, and buying cycle has its own tangent, and after the produce comes, everybody tries to sell. But in most of the industry, it is like, the plan for selling already starts when the production is being started. So that's what we are trying to look at. So that's one side of the problem. Another side of the problem, if you take it, is that in any industry, if a graduate comes out of the college and he wants to get into the industry, he has two options. Either he can become an entrepreneur or an employee. But if you look at agriculture, everybody should become an entrepreneur or at best a freelancer. He has to manage his P&L. He should be aware that if I spend 10 rupees, I'm going to get 12 rupees back at least. Which, expecting a 50% of the population to have that knowledge and that level of expertise is actually criminal. So what we are trying to do is that, putting both the things together, we are trying to get into a corporate farming model where we can have farmers on a guaranteed income model, so that he can do his work without worrying about whether he's going to get the money at the end of the month or not. And then we are tying up with corporates, agri-processing and agri-commerce industry to get a sense of their demand and then demand cycles, and trying to link it up back with production. So in that way, what we think is, we are sort of changing the baseline on which the whole agriculture is being done today. A farmer can be an employee, he can get a regular income every month, and using that, he has his good lifestyle. You no more hear about farmers committing suicides and, a lot of farmers running after freebies and, asking for loan waivers. Most of these problems will be solved by getting into a sort of a corporate farming model. And there's a third equation, which is the landowners. There are a lot of landowners who have left agriculture. Maybe the previous generation was doing agriculture, but the current generation has done their B.Tech engineering and right now in the cities doing their software jobs. And there's a lot of land that is available. So we are trying to do is that, we are trying to pull up that unutilized and underutilized agriculture lands, link them up with employed landless farmers on a salaried model, and then perform the production. This is the crux of our whole business model, basically. And we are trying to be like any other industry. You get a demand, you produce against the demand, you sell your produce. That's what we are trying to do.
So, Sataka, sorry. So that's fascinating. So here, I have, for instance, done a lot of work with agriculture, and I've found that 30,000 is, maybe I should ask a question. Why 30,000? How did you decide to pay the farmer 30,000? 30,000, you said?
The salary, right?
Yeah.
Yeah, see, it's based on the economy in the rural segment. What is a good amount of salary to live in? 15,000 is typically a very good salary for any person to live in a village. 15,000 is a very good salary. Currently, what they are getting, a good salary today. But why are we at 30,000? See, there are two ways. How did we arrive at 30,000 is the first question. Right now, average income of a farmer in Telangana, the margin of farmer is 9,403 rupees, as per the statistics. Why is it so? Because a farmer is cultivating 3 acres of land, 2 acres of land, 1 acre of land. How much can he generate out of 3 acres of land? So our premise basically is that if a farmer can cultivate 20 acres of land, let's pull 20 acres of land, give the farmer to cultivate 20 acres of land. And then based on that, what we did, and then we mapped it against the standard of income, standard of living in villages, and said, okay, 30 is a good number where we can attract farmers to, come into the model. And once he comes into the model, probably if tomorrow ICICI Bank gives him a car loan or a bike loan, there will be 10 more people who would like to come and join the model.
I see. That's very interesting. So now this idea of, well, first of all, I think I want to relate some data that actually incidentally comes from ICRISAT in Hyderabad. Some years ago, they had given us about 30, 40 years of farming family data to understand what has happened to their incomes over 30 years. So after a bunch of cleaning and joining and all that, we realized that there was data for 1,100 families in that pool. And if you ask a question, how many of those families are net positive on agriculture alone? That number was 3 families, right? So a lot of them went to urban spaces because their incomes became somewhat stabilized. So you solved that problem. Now, by pooling the land and by making farmers salaried, is there advantage on the cost side of your business? Does it, because in some ways the inputs are inputs, right? So what happens to the cost?
I will take a simple example. Let's take the example of tomato. Okay. Typically, if I'm doing farm gate production, farm gate procurement, and bringing into the city, maybe if the market is at 15 rupees, I buy it at 11 rupees from the farm gate. But if you get into production, core production, you can produce it at 6 rupees 70 paisa. So on a kg of tomato, while a lot of startups are struggling to save 3 rupees, to make a margin of 3 rupees, as a company, you're looking at a margin of 8-9 rupees. It comes with its own headache of getting into production, doing all those things. But the point is, that is the point here. You get into the production, you streamline the process, and then from 3 rupee margin, you can get into 8 rupee margin on 15 rupee MRP, 15 rupees selling price.
I see. And on the demand side, you have a greater bargaining power by
Yes.
you having pooled, yeah.
Yeah, we have already generated decent demand, and after generating the demand, we saw this. We saw that why are we fighting for that? Fighting to not able to make those 3 rupees. That's where the whole the whole thinking started. How can we be profitable, and make more than 3 rupees so that we can stay afloat? That's when we saw that, and then now, I mean, it's a bad thing to say, but you can fight your competition very well if you're doing your own production. You have a lot of margin to play around with.
May I ask, what is your margin?
I almost told you 8 rupees is my cost and 15 is the selling price.
Right. Okay. Now, so
more correctly, from gross margin 40% from farm gate production, you get to 85% on a gross margin level.
yeah,
In a
wow.
F&B space.
That's okay. That's a good number. Yes. So now I can imagine that people management could be a challenging task for a model like this, right? Is that true?
Yeah, I mean, see, farmers are not used to this model as such. Their life cycles are sort of not very, you would say, industrial. If you want me to call it. Their lifestyles are a little different, and they run at their own pace. So, getting the initial set of farmers to work with us was a challenge. Engaging the first set of farmers, there's always a question like, are you treating me like a farm labor? If you're giving me are you treating me like a farm labor is the first question some people ask, and which is not what it is. We are looking at more of a white collar type of game, a manager for the farm. Really, a farmer is like a manager for the farm. He will get those blue collar people who will work for him. So that mindset is the whole problem, which we have to be one of the first people doing it. Pushing it in is like a challenge for us.
Yeah, I asked that question because, in many other domains, like for instance, look at business models for household workers. There was, what was it, Saath in Ahmedabad that was trying to aggregate the household workers and trying to make them salaried, right? That, why would you want to earn daily or whatever? I'll give you a salary. But that had there are people management issues. Like for instance, what people were valuing, this is what the workers were valuing, was that, but when I'm working on my own, I can take a day off whenever I want. And here you are putting there. So are there other difficulties with this business model so far? I mean, what are some of your top challenges?
See, one more thing what we are trying to do is that we are trying to make it completely system driven, get the whole process into a system, and maybe we should be able to go for an ISO model where the farming is also standardized, sort of a thing with its own template for each crop. So the basic challenge is that getting it completely into a system-driven model is one of the big challenges that we are actually facing. One is that the information. There's a lot of information. A lot of farmers have information. Forget about the scientists. The farmers have a lot of information, but collating that information, putting it into a system, making it available for a fresh agriculture BSc graduate to be able to follow that is one of the big things that we are trying to crack right now.
I see. Great. Well, I could keep asking you questions for 1 more hour and still be entertained.
I don't mind answering.
Let's come back to you a little later. Let's go to Bhavdeep and talk about health.
Yeah, thanks, Dr. Chintan. I'll first quickly introduce myself. I'm Bhavjot. I'm one of the... and I'm often confused as Mr. Bhavjot, that's fine. So, I'm Bhavjot. I'm one of the co-founders at Clinikk. My background is that after completing an integrated study from IIT Roorkee in 2012, I worked for Royal Dutch Shell for 4.5 years. So first 2 years I was working in Iraq. And then after that, next 2 years I was working in Brunei, like a liaison between Total Gas and Shell Oil in Houston. And then from a very interesting oil and gas career, jumped into a domain which I had zero understanding, knowledge and idea about, that's healthcare. And it was mostly driven by my own experience, like unfortunately, like how a lot of people in India actually go through something that happened in my own family, right? So when I was studying at IIT, my father had developed diabetes. And like so many other families, we only got to know that the situation or the medical condition had progressed to an extent where, he had now chronic kidney disease. The family had no insurance, there was no good tertiary care. I come from a very small town in Assam, like a tier 4. And we had to take him to Chennai, and like all brother sisters were studying. In Chennai, he was almost for all 8 months, and then post that we were not even able to save him, right? And it was like a huge emotional and financial blow. So for me, it was very clear that, listen, if there is the practical use of technology to change or to bring like a paradigm shift in any industry, it's the healthcare which needs it the most. A lot of the business models in healthcare have been around loose aggregation, have been around, just marketplaces or, platforms, but that doesn't really change the way healthcare is delivered, right? So it was very important for me to get there. So I was joined by my co-founder, Dr. Suraj, who's also an orthopedic surgeon, a single-digit PG rank holder, and then we started off Clinikk. Now, what is the problem statement? As I heard Satak also talking about, like agriculture, even healthcare has like myriad of problems, right? Which is the most important problem that you would want to pick as an organization, and how would you solve for it? For us, it was very clear that there are two challenges that we would pick, right? First of all, there is no organized primary healthcare in India, right? Like for anything, you just have to directly land at a hospital, or go like run from pillar to post. When you talk about the other biggest problem, health insurance in India is just an simple financial indemnity cover. What I mean by that is that it just covers for your hospitalizations. India is a young population, and I have done selling of insurance on the ground to understand what the youth feels, and that's actually what the idea here in India as well is that in India, 70% of the population is the 70% of the outgo that the younger population has is not towards tertiary care, but actually towards your outpatient care, right, which is not covered by the insurance. And it's a young population. They don't generally see value in a product which only covers your hospitalization. What happens to their day-to-day medical problems? What happens to consultations, medicines, diagnostics? All of that they have to pay out of pocket. And if you have to buy an OPD insurance in India, first of all, insurance itself is beyond reach because of the pricing. But if you have to buy OPD cover in the insurance as well, it becomes like a very, very aspirational, expensive product. How do you change that? How do you make sure that a simple man living in my town also gets access to free medicines, free diagnostics, free teleconsultations, free in-person consultations, and free health cover as the health insurance, while making sure that the doctor is not over-prescribing, the doctor is not over-diagnosing, so many things, right? So that's where Clinikk's managed care model comes in. We are aligning incentives across doctors, patients, and insurance providers. So for the first time in this country, just by paying as low as 400 to 500 rupees per month, your entire healthcare is cashless. You don't have to pay a single penny out of the pocket. If the doctor has prescribed you a prescription, everything in that prescription is covered. And how is the doctor prescribing? He is getting to a diagnosis, and post that our technology makes sure that the treatment being given is protocol driven, and the protocols are for the best treatments, for the best possible treatment of that medical condition. For example, if you go with a chronic bronchitis to any of Clinikk doctors, you get a very standardized treatment. You don't get random 10 medicines being prescribed or 20 diagnostic tests being prescribed because the doctor wants to make money. So these are the things that we try to tackle. So just by paying 500 rupees per month, like you would pay any other utility bill, you pay your healthcare bill. You get unlimited consults with our doctors in person and virtually, like in video consults, teleconsults. If the doctor has prescribed you medicines and diagnostics, you don't have to pay for it. If the doctor wants you to refer you to a senior specialist, you don't have to pay for it. Even if you're 18 years or 60 years, you pay the same premium for insurance. You get a single private room and up to 55 lakh rupees is covered. just by paying lesser than what you would pay for a chai in a month. And I think that is the business model that we were able to like crack and bring a subscription-led managed care model to the industry. And currently we have more than 15,000 families in Bangalore itself in less than 6 months that we have been serving with this product. So yeah, I mean, that's been like the gist of what we have been trying to achieve.
Wow, that's really counterintuitively fascinating. Really, very interesting. So now, so these 15,000 people who are your customers now. What is the profile of these people? What is the persona?
So these are 15,000 subscriptions. It can have like a family subscription, like 4 people in one plan also, 1 person in one plan also. Who are we targeting? Like when you look at India as an economic pyramid, right? Like there are 3 distinct divisions that we see in our mind. There is 750 million people who are covered by the world's largest health insurance plan, the Ayushman Bharat. Then you have top 150 million people who have either bought a retail health insurance or are people who have been giving insurance by their employer. Now there is a huge 500 million gap in the between, which NITI Aayog refers to as the missing middle, right? So that is the segment that we are after. So the kind of people who like become our subscribers are aspirational people like who have small tea stalls, are into entry level jobs at IT, and now it's been going slightly up with people having like small shops with 3-4 people employed, like MSMEs. So these are the kind of people who subscribe to the plans. So the most hit that we have seen is people with household income between 40,000 rupees to 1 lakh rupees a month. That is the general category which gets a lot of attraction to because they want to buy a health insurance product. Now this is the right product they find where not only the hospitalization but the OPD also they don't have to pay for.
And when you go to them, what do you say?
See, there are 2 challenges that they have already. Number 1, if they have to start a relationship with the health insurance, they have to pay them a huge money upfront, right? Like 10,000, 20,000, 15,000, depending on their age, which not everybody is able to pay. So that's problem number 1. Problem number 2, health insurance is a very complicated product and it is very restrictive in nature in India. It's not truest health insurance the way it should be. So what we have done is we tell them that you don't have to give us like a yearly commitment. What you do is just pay us monthly like you would pay for any other bill. So that the whole jump that they have to make in decision making becomes simpler for them, right? So that's point number 1. And point number 2, they see that, okay, how many times do I get hospitalized? I don't. But how many times do I have to go to a doctor? A lot, maybe 3-4 times a year. So that is getting covered, right? So they see the whole, India is a value conscious market. So they see the value in that product from that perspective. So that's what they like about it.
Yeah, no, I think you're thinking that OPD is a market, itself is a breakthrough in a way. So now, I see. So now the one more question. So generally, when insurance providers go to sell their product, one of their major concerns is adverse selection, right? Those who are the costliest would come to you first. Do you worry about that?
We actually, on the contrary, welcome them because since you are taking so much stronghold into the primary healthcare part, you are able to manage their medical condition. And these are the people who are most frequent users where you actually make some revenue on the subscription on the medicines and diagnostics that they have to purchase, right? So not just that you are taking care of their medical conditions, you're also making them more frequent users. And that's not making us bleed per se because we are just working with generic medicines and we are working with lab tests which have great partnerships with us.
Oh, I see. So here, wait a minute. So your revenue streams are, one is this subscription. Are there other revenue streams?
So the other is like if you, there is a limit to every OPD limit, right? So once you cross that OPD limit, which is anyways a generous OPD limit, you get only 30% discounts on the medicines, but still the overall bill is lesser for the customer because it's all branded generics that we use, right? So it's anyways lesser for them, but we do make, and the other thing is that the LTV, the lifetime value for us is very high for that customer because they tend to retain with us for a longer period of time.
And so you also are doing some form of pooling when it comes to buying these medicines and all that, or is it still per customer basis you are getting
See,
these generics?
So for us, it's very simple, right? Since, again, it's all tech-driven, we know once the doctor comes to a diagnosis, the whole prescription is pre-populated as per the protocol, right? So our system is able to tell us that which are the medical conditions which are more frequented, and based on that, our inventory management system is able to stock 90 SKUs in the care centers and actually serve the customers 98% of the times using that just 90 SKUs. So you don't have to do like a retail pharmacy setup. You just, as per the frequency of the medical problems that are coming to you, that's where technology comes in. It wouldn't have been possible without having like a great solution which actually reads into your inventory and manages your inventory real time, and a decision support system which keeps telling you the data of what are the medical conditions which are being frequented at the centers.
I see. Okay. So now can I ask you a more possibly business model-wise sensitive question, which is what fraction of your patients do you end up paying for?
So, see, the hospitalization, everything is being underwritten by the insurance company. So, we just pass through the insurance premium to them and they underwrite the hospitalization risk altogether. The only thing which we have to pay for is for the medicines and diagnostics for patients who are in the all-inclusive plans, which even if like 100% utilization is there, we still end up making money there.
I see. I see. At 400 rupees a month.
400 for one person, for a family.
For a person, yeah.
For a family, it's 800 rupees.
Yeah,
per month.
I see. I see. Excellent. Excellent. Let's, super. Thank you so much. So let's hear from Ravi. Let's hear the third business model. Then we'll ask some finance questions.
Good afternoon. My name is Ravi and I'm from eSamudaay. So we believe India is a land of billion opportunities, right? Not thousands, not million, but a billion opportunities. Now what makes me say this? Well, a couple of things. We heard Satakarni speak, we heard Bhavjot speak as well about how each sector has so many problems. And we all know every problem, every crisis is an opportunity, right? So there are these billion opportunities. And the second reason that makes me say this is, we are a land of 1 billion plus people, right? Now imagine, I'm sure each one of you at some point in your life had aspirations, dreams, and many of you have actually translated that into becoming entrepreneurs, right? I'm sure this aspiration resides in almost every Indian. And if the opportunity, if the tools are given to every Indian to translate that aspiration into action and into reality, I'm sure we'll be a very, very vibrant economy. And to quote what Dr. Chintan mentioned earlier, saying that moving from being the fourth or the third largest economy, leapfrogging to probably the world's largest economy. There is an opportunity of $50 trillion to be made from the digital economy, and we are at the beginning of that. We are at the beginning of a $50 trillion economy which is waiting to be created. And eSamudaay, my company, creates digital tools which makes it very easy for entrepreneurs to create digital businesses. So to visualize that, imagine you had an entrepreneur in a small town in Chapra or somewhere in Bellary or somewhere in a small town in Telangana. And if that person wished to start a Zomato-like business, a Swiggy-like business, an Ola-like business, Paytm-like business, our digital tools make it very easy for that person to deploy those tools, create a marketplace, and create that business. So in a sentence, we are in the business of enabling entrepreneurs to create digital businesses. So a bit about my background. I am an engineer. I've done my metallurgical engineering. I'm one of the few people probably in the digital space who has also worked on the shop floor. And I have worked in a manufacturing plant. I have worked in the retail industry and now in the software industry. So we are a technology first, software as a services company. I hope I introduced myself clearly enough.
No, so that's great. So what if I am a store, let's say?
Sorry?
What if I am a business, an entrepreneur of this sort in a tier 3 town?
Right.
What is my use case? What do I have to do in order to use your platform or your tools?
Okay. So you're a store, right? So you are already in a business. So in that sense, you're already an entrepreneur. What we are doing is creating opportunities for other entrepreneurs to create marketplaces populated with business owners such as you, and then create a vibrant ecosystem. So for example, let's say in the town of Udupi, where we have actually done a live model, right? And it's been running there for the last 2 years now, led by a 26-year-old lady who has built up a team. And starting with about 4 to 5 orders. So she did exactly this. She digitized the shopkeepers, the traders, the restaurants, the merchants in that town and created a marketplace, something like a local Amazon, if you will, what we call as L-commerce, right? It's not e-commerce because there is the local presence of the store in that town, but there is also the convenience that the digitized business offers to the customers. So this entrepreneur aggregated the businesses and offered that on a platform to the residents of that town. Now starting from about 10 orders a week today, and this is without discounts, while paying for delivery charges, today they are doing about 2,000 orders a month. And their revenue, their margins are far better than any one of the e-commerce players out there, any one of those giants out there.
And how do you earn? Who pays you what for what service product?
So my company is the software provider, right? So we are continuously innovating, we are continuously creating better and easier to use software with better features, more customized products. So any entrepreneur who uses our digital stack, and depending on the number of merchants she or he onboards onto the platform, we get a monthly subscription of 200 rupees. Per merchant.
Per merchant.
Per month.
Per month.
That's it. So we don't take any commission as the software stack provider. Our revenue model is very simple, 200 rupees per merchant per month from any marketplace that is running because of our software.
And this is an app?
This is, thank you. Yes, this is multiple apps. It's an app ecosystem. So what we started off by calling as, apps, business in a box, right? So business in a box, it has a merchant app for sellers or merchants or restaurants. It has a consumer app where consumers can log in and order. And it's got a delivery agent app. And it's got a control console for the entrepreneur to monitor which businesses are doing well, how many orders are flowing through the system, what can be done digitally to promote one business if it is lagging behind, what support can be given to someone else. So it's sort of the digital infrastructure to create digital republics in every small town and city of India. So there are about 750 districts in India, and we believe that each one of these districts can, in each sector, create a unicorn on its own. So we don't need unicorns to be only coming from Bangalore, Hyderabad, Delhi or Mumbai or Kolkata. Unicorns can come from every part of India. So that's our mission.
Yeah, I see. Okay, great. I mean, how many people, how many users do you have at this point?
So far we have about 15 active centers where our software is deployed. When I say active, there is a lot of transactions happening. People are using the platform, orders are going back and forth. But we have covered about 50 cities where the marketplace is in various stages of initiation. So some of them are just being formed, some of them the buyers are being onboarded. So there's a gestation period because you first need to take care of the supply side. And once you have the supply side, then you need to bring on buyers onto the platform, and then you create a multi-sided marketplace, right? So I was explaining the model to someone whom I was sitting to in the audience earlier, and I said, yeah, so it kind of can evolve into a super app for that town.
Can I ask you one last question? That how big is your team? One, part A. Part B, how many businesses you have to onboard to support a single head count in your team?
Okay, great question. So we have 58 people on our team right now, and this is including the tech people, the consultants, the interns, all of them. Right now we are going through, we are raising funds, right? So we believe that we would optimize our operations at a staff strength of about 100. We wouldn't need to go beyond that because once having built the technology stack, it's only a question of adding features and optimizing, making sure that things go well, right? So 100 is what we are looking at. And I believe if we have about, say about 250 marketplaces, we should be doing good, real good, yeah.
Okay, great. One last question with which we will end. This is for all of you. So what have been your experiences in speaking to investors? Are they saying, this is great? Are they saying, what is this? What are your experiences? Do investors sort of align with you, have lots of questions? What is it?
Since I spoke last, I think I'll go, yeah. So it's been quite interesting. So what we are trying to build here is a different kind of economic order, right? Traditional corporate models, what we have all seen, have been pyramidal in nature, right? So who does most of the work? The people at the bottom. They do the hard work, the effort. But who has the best view? The person at the top, right? And the pyramid is such that it gets more and more exclusive as you go up, right? So it's a case of exclusivity and elimination of people from equitable distribution of wealth. What we are trying to do is make it more circular in nature. So it's more of a distributed model, a decentralized model, if you will. So these marketplaces that we help create are not connected to us in any way. We don't own them. They are independently run by the entrepreneurs so that whatever value created by that entrepreneur, she or he acquires that value, right? So when we speak about this, obviously you're going against a traditional system that has sustained for a few centuries. You're trying to change that. So obviously there is thought, apprehension as to whether we will succeed or not. That is there. But for those who get it, and for those who say that yes, this is something that is due, because for how long will this centralized, concentrated model work when every person aspires for recognition of the value she or he has created, right? So fundamentally, we are based on reward, recognition, and ownership. If you do put in your efforts, you have to be rewarded, recognized, and you get ownership of what you have created. For those who get it, they feel that this is a great way for sustainable growth. This is the way we need to move forward, and it will help create a lot of local opportunities, right? You don't need certain things to travel hundreds of miles. You don't need food to be grown thousands of miles away and transported somewhere. So there's a lot of impact towards climate change, towards sustainability, equitable distribution of wealth, all of that. And for those who get it, they really like it. So so far we've done 2 rounds of fundraising, and we have raised what we need. So I guess, yeah, it's been good so far. Thank you.
There are typically 2 questions that come to us from the investors. The first thing they say is, why are you diving into the deep end of the sea? Right, it's like, you're getting all the way down into production, and then getting all the way in. So that's one big question that a lot of investors ask us, why are you getting there? Why don't you build a platform which farmers can use? That's like the shallow end of the whole story. But we are getting into the deep end and we want to be there. So that's the one question that we get. The second thing that my investors ask is, are you a social enterprise or are you a for-profit enterprise? When you talk about I'm trying to give farmers salary, increase their livelihood, better their livelihood, it may sound like a social enterprise, but all we are is basically capitalism with conscience. That's it. You make money while allowing others to make money. That's all we are trying to do. These are the two typical questions that we get. The main thing being the deep end. You're getting into the deep end. When will you come up again? Sort of a thing.
For us, I think the only question that we get is, why do you have to get into the in-person care? Why not just focus on the teleconsultations or the digital care or the virtual care, right? Whereas in India, still it's like, even at the peak of COVID, only 1%, less than 1% consults were happening on digitally. Although the first time the patient goes to a doctor, then it's easier for them to follow up digitally. So I think that's the biggest pushback that we get, that why do you need those primary care small centers that we have, right? Today it's ours, tomorrow it can be a franchise, etc. But why do you even need that? Why can't you be a digital only, like sell digitally, deliver digitally? So this is the biggest pushback, because it's easier to scale per se, right, in the mind of a VC. So that's the pushback that we get.
Great. Well, I want to first congratulate each of you for swimming upstream on behalf of all of us in, investment theses can become quite narrow and rigid and repetitive. And yet, many investors, when you touch their conscience, are able to open up to a lot of different possibilities. And I think you are forerunners in trying such things. So thank you very much for your participation in this conversation. And I need much, much more. We need much, much more of this experimentation, which I hope the 80,000 startups that we have registered are up to. And we'll see more of it. Thank you so much.
In supporting these. And while we do that, this session will be moderated by Sri Madhav Joshi, CEO, India Health Fund. The panelists whose views Madhavji is going to be eliciting are Aravindan Srinivasan, India CEO and Product Director, South Asia for Asian Venture Philanthropy Network. We've had some interesting projects between IKP and AVP, and that, in fact, that Aravindan has actually set up the context for all of this. I mean, I'm telling you, the credit actually goes to your organization, because you made us think about impact investments much more than what we were currently thinking. We also have Himanshu Sikka, Project Director for SAMRIDH. We met at the Digital Health Coalition, which was set up by Dr. Ashwin Nayak, so I think it's a small world. And one thing led to another, and we realized we need you here as well to share your views on supporting startups for social impact. And then we have Shama, who I met pretty recently, through another startup in which IKP has funded into, and we realized that if these startups need to get into a social impact space, then they should be looking at how to, how to enter into these spaces through agencies which are already present out there. And so with this, I invite you all to the stage and take the con.
So good afternoon, and thank you to all of the panelists for joining me today. We've got a fairly scattered room, so if some of you would like to move forward, it might just make for a closer conversation, but that's up to you. So philanthropy is not new to this country. We've got a long history of philanthropy, both in India and coming into India. But the question has always been, how can philanthropy, what kind of impact does philanthropy create? And more importantly, can good be made to do more good by leveraging philanthropy for greater impact? And that's really what today's panel is all about, and that's what we'll be talking about. So I think the first question, maybe Aravind, I'm going to ask you to kick us off, given the experience and the work you do in working with funders representing different colors of the spectrum, all towards mobilizing capital towards social impact. Has there been an evolution of thinking as well as the hard money that goes into philanthropic funding, from pure grants to more catalytic funding?
Yeah. Thanks, Madhav and Ambuj and his team as well for this, for organizing this event and this specific conversation. I represent AVPN. AVPN is a network of social investors across Asia. We have a term for this. In AVPN, we call this the continuum of capital, whether it is starting from grants, bridge or debt or equity, whatever it is. The financial instrument is more, it's an instrument, right? For me, catalytic aspect of philanthropy comes from, how are we using this to deploy capital in a way that it is fit for purpose. And it's not one or the other. Grants to catalytic is not necessarily two different things. But catalytic to me has three specific aspects that it must address. And it is a little different from how grants are typically thought of. Because in general terms, grants usually, in the origin of philanthropy, it's all targeted either where it's just not a feasible market for the private sector to go behind, or that the government has failed and citizens do not have access to an essential service. But grant has always focused on the service provision aspect of things. And hence, a lot of the focus, especially from the investor side, has been engaging with people in a contract basis, right? I provide you funding, you provide someone else a service. But catalytic philanthropy to me has to address three things. One is a clear outcome focus, saying we may be 5 people in a room working on a same problem, but can we all agree on that outcome, that first part. The second aspect of catalytic is whether it is taking risk. Because according to us and my own experience is that philanthropy has huge, or at least it must have huge risk appetite, given that there is no expectation on capital returns. So the amount of risk one must take when deploying this, or the opportunity cost of not taking risk is even more in this particular case. And the third aspect is, going back to the first principles, what is the sustainability? Is it exiting into a market-based model, or is this going to exit into some systemic change where government can provide this service? So catalytic capital to me, or catalytic philanthropy, has to address these three things. Now, it doesn't come at the cost of cannibalizing something else. It has to be in complementarity, but the thinking and the approach, probably this is, my experience.
No, thank you, because I think you bring up a couple of very pertinent points, especially around failure of service delivery, as well as sustainability. And Himanshu, this is an area that you've been working on very closely and probably run one of the most successful initiatives to really leverage philanthropy. So how have you seen the evolution of philanthropic funding? And do you see different colors of different funders? And maybe you could talk to us about that.
Thanks, Madhav, and thanks to the IKP team for having us here. As Madhav, you mentioned, I currently manage the SAMRIDH Healthcare Blended Finance Facility, which is supported by USAID. And the basic idea behind the facility is that how you can use philanthropic funding to enable more capital for social enterprises who are working for the betterment of ABC area. Right now we are focusing on healthcare, but then the idea is to how we can expand it to other areas. To your question, in terms of does philanthropy have different colors? Yes, it has different colors. Has it evolved? I think it's still evolving. And it evolves with different forms of philanthropy. So if you were to kind of bucket them into categories, at one level you have the large philanthropies which are international in nature, or some of the domestic endowments as well, Tata Trust being one of the largest one in the country, or the likes of Gates Foundation, and others which are international. So that's one side of it. And what we have seen there is that they are more risk takers when it comes to the use of newer instruments, or when it comes to being more catalytic in nature, be it because of the nature they are formed in, or the regulation that governs them. The second set of philanthropy is more domestic, which is in the form of the CSR, and we all know that India has the mandatory CSR regulation. Now that is, I would say, very, very early stages of evolution, and especially when you talk about moving away from grant mechanisms to something which is more sustainable, which is leveraging more of other forms of capital when they come in. And the third is the high net worth individuals or family houses within the country, which is a mixed group, I would say, because there you see both kinds, which is doing pure philanthropy in terms of giving grants, as well as those who take more of a investment standpoint. They invest, or they put in the funding into social enterprises, but in way of, say, equity or low cost debt. So that's, I would say, is somewhere in between in terms of its evolution. There are both set of family houses working in that area. Also, when you look at this entire piece of philanthropy, and to your earlier question in terms of its catalytic nature, I think we have to always, or the sector overall has to come to realize that if we have to bridge the funding gap which exists between us and SDGs, it's in trillions of dollars. The numbers keep changing. We keep reading reports that because of COVID, that 3 trillion figure has gone up. And if you look at both the philanthropic capital as well as even if you add the official development assistance that comes into this area, it's minuscule. So if you have to bridge that gap, unless or until private capital is mobilized alongside, it's not going to happen. And private capital is always risk averse because they are ultimately looking for returns, and wherever they say it's a riskier proposition, they would tend to be move away from that. So I think philanthropic capital can play a very, very critical role there, and that's what we have seen in case of SAMRIDH, where $30 million of philanthropic capital has been able to mobilize $300 million of commercial capital coming from the private sector. So that's a leveraging value, that even with that small amount of philanthropy, you can get 10x and above kind of private capital coming in. So I think that's the play that we have to kind of sell going forward and convince the philanthropies that to see more results on the ground in a much more sustainable way, unless you work very closely with the private sector or the private investors, you're not going to be able to achieve results in the long run which are sustainable and which deliver benefit for the masses. Because the mentality otherwise remains that I invest X amount of money, I see X amount of outcomes on the ground and be happy with that. But that's not going to change the world as we want it to change.
No, thank you. And again, I think great experiences and a fantastic example of the 10x leverage that you've got. Because that really brings us to the question of how do you actually leverage philanthropic capital to attract other forms of capital to maximize impact? And Shama, you've got a lot of experience in this. We'd love to hear your experiences on what's worked, but equally importantly, what hasn't.
Thank you very much, Madhav, and thank you to Ambuj. I think he has me here as representing Swasti. We're a global public health organization based in Bangalore, but I also wear the hat of trustee at a social enterprise platform and look across work that happens not just in India, but Southeast Asia and parts of Africa. And I'm going to try and draw on that as we address some of the questions you're raising. I think what is interesting about this conversation is somewhere there is this, at least I'm getting a sense that philanthropic capital is not equivalent to other forms of capital. And I want to say, just second Aravind, when he says that philanthropic capital actually takes the most risk, right? Because they go into unknown areas to address and create transformation. So I really think it is the powerhouse, and I think we want to see more philanthropy. Can we leverage it? Of course we can. It gives great runway for trying to solve for the most wicked problems that we have today. And I think if that runway is there, we can try and find solutions that can be transformational to the point that Himanshu is making, right? So during COVID, I worked with about 354 organizations across the country. We reached about 15 million people. We raised about $42.6 million US dollars. 75% of that went to the partners we were working with. And we leveraged another 83 million US dollars. Now that leverage didn't come from private sector because most of the people that I work with, the very, very marginalized groups in this country, are not interesting enough for the private sector, right? So that leverage is actually coming from unlocking government funding, unlocking other philanthropies, unlocking in kind from the private sector, right? So we unlocked a lot of vaccines, we unlocked a lot of medical services and things like that. But philanthropy allows us to do that. And especially because we're working on issues, and I think when we're talking about impact, we should also be clear, like Aravindan is saying, what is that impact and what is that outcome, right? But when you are talking about transformation for marginalized groups, whether it's for the 750 million that Bhavjot was talking about, which is bottom of the pyramid, or the other 500 million that's the missing middle, I think philanthropy is actually the greatest risk taker then and actually provides the runway for the kind of transformation that's possible. Now what's not working, I think, at least in the Indian context, is the fact that we want all the leverage or the blended financing or all the results coming in one institution. Right? So everybody's looking for this one entity that will be able to deploy all different forms of money, bring in the returns, bring everything together. I think we just have to understand that the regulatory environments don't allow for that. It has to be collaborative, and I think as long as different forms of money are working together for that outcome and that outcome is being achieved, we will have to accept it because that's just how this sort of playground is. Over to you.
No, a very valid point, Shama, that no single entity can achieve what is required to be achieved. And just to give you an example from SAMRIDH's perspective, it's a facility which brought in $30 million, as I mentioned, of philanthropic capital, and that's coming from both offshore philanthropies as well as internal HNIs and CSR like kind of pioneering that area. We've just closed one deal where CSR is coming for the first time to do a risk guarantee. But then you had bilaterals like USAID contributing to it in a very, very large way. They in fact are the ones who started this entire concept. We have the likes of Rockefeller Foundation coming in, Ford Foundation coming in, the likes of Morpho Foundation contributing, so those are the larger international ones. From the domestic capital, the likes of IndoSindh Foundation, we have IIFL now, and few HNIs who are now showing interest to kind of use their financing in a different way. And what I feel today is that what SAMRIDH has shown is as a model, and that can be replicated by many entities in many sectors. We ourselves are now trying to take it to other areas like agri-tech, clean energy and education. But then the market and the requirement is huge, and it can be kind of many more players need to come into that space. The approach that we have taken in this entire thing, and to the question around leveraging, is that there's a lot of private sector investment which is sitting on the fence, which is not able to take the plunge, and do you think that they don't see the rural areas or the tier 2, tier 3 towns or the poorer as the market? They do see them as a market, but somehow their risk parameters and their risk appetite is not tuned to be able to invest in those areas. So that's where what we've seen is that this philanthropic capital can play a very instrumental role in de-risking those investments for them for a short period of time. And again, I keep forcing that point again and again. Blended finance per se as a concept is not a long-term solution. It's a short-term corrector or a correction mechanism which can be there for 4 or 5 years, but ultimately it should lead to the investors realizing that the risk that they were perceiving or the systems were perceiving actually does not exist. And that's where we are working towards. And we are in a very short period of 2 years have seen that shift. To give you an example, we structured a social success note with a NBFC, and we said that, okay, we are giving you, I think so, not $500,000 for a 25 crore loan book. So 1:10x kind of leverage. What we have realized is that $500,000 and the 25 crores that they, the first loan book that they gave, because then they realized that the risk was less in these kind of entities, they were able to achieve a lower amount of money. So now that with that same $500,000, it's possibly going to be around 40 crores of loan book. So it's about changing the perception of the investors, changing their understanding of the sectors, showing them those proof cases that, okay, this has worked. These entities are paying you back better than possibly your pure commercial investments with large enterprises that you make. And once that realization is done, I think so then that opens the entire ambit further. And that's going to be the biggest leverage if we are able to achieve that in any of the sectors in the near future, that what we are at least trying to focus on.
No, thank you. Because again, I think both of you bring up two very interesting points which I'd love to pick up on, which is the notion of collaborative approaches rather than single window funding. And the second is this whole aspect of de-risking, which really raises the question of what then represents metrics. Because these are different forms of capital that are seeking very different kinds of outcomes. So what are the impact and what are the outcomes and what are the metrics that you can actually use to represent the different colors of capital that are actually being spoken about here? And Aravind, love to get your thoughts on that, given, I think, the very wide spread of funders that you work with.
Yeah. So I think when we are talking about impact, of course, as a sector, I don't think we have standardized impact metrics, first of all, to the extent where we can say everybody can align on a couple of things. So it is still a way to go. However, when we are looking at specific instruments like what Himanshu is mentioning, the entire initiative has to focus on the same set of metrics. You cannot change metrics for different investors. It's like a mutual fund. You can't ask individual stocks, what's the return, or that, one or the other. You're investing in the fund. Don't open the box. You lose the warranty, right? So you're coming into it because there is a investor with a higher risk appetite willing to underwrite the risk for other investors so that you're able to unlock more capital. So all of this capital needs to align on that outcome. So I think measurement at an outcome level, at least there has to be some compromise where people are able to say, can we agree on these 3 or 4 basic numbers based on whichever sector that we are going after. There is a risk associated with it, which is creaming, right? You choose the metrics that you can easily measure. So I think that's something to be conscious of. The second aspect is, because it's about taking risks, we need to measure what have we learned because of this risk. And the learning metric has to be very, very key, because this, like in any venture capital approach, you are investing in 10 knowing that 9 might fail. But in those 9, the failures need to be learned from. Those learnings have to feed into the 10th venture to make that a much more or a grander success, right? So the aspect of learning has to be key, and knowing what we want to learn from this. Sometimes it might be intended, sometimes it might be surprising, but having a very clear learning outcome is going to be useful. The third part of it is the change in the ultimate exit route, right? Like we spoke about sustainability. So have we really done the market building via this route, like you were saying, okay, we have shown that there is viable business models that exist, or have we shown the government that you can do this in a sustainable way within whatever budgets that you have, with a few tweaks, here and there. So I think the measurement at a systems level, whether it is market or whether it is government or any of the other actors out there, can this actually move into that mainstream larger system? Because ultimately that's when the pie is growing. Otherwise, then the initiative ends, and then everyone walks back. Hopefully, some of them will continue investing, but then otherwise, the reason why people came together to choose to, let's say, spotlight that one issue might be lost. So that continuity and sustainability metrics has to be charted up. So that's from our experiences, and this is essentially because we've run a lot of pooled funds, right, as AVP. And the first thing we tell the investors is, look, if you want to be the only person running the show, then it has to be a single donor fund. You choose your portfolio, that's fine, but when 10 people are come together, you need to have a governance committee. That committee needs to have representation, inclusion from both the people who are funding as well as the kind of impact and therefore the communities you're trying to serve. That equity needs to be there in the decision-making process.
No, thank you. So I've just received our time check, but Shama, I know you have a very different point of view on impact, and it would be unfair for everybody to not get your perspective.
So I'll make it quick, right? I don't think there is much difference in terms of demand on metrics or progress as far as I'm concerned from catalytic funding or philanthropic funding. I think the difference is that philanthropic funding is more demanding on actual social impact, whereas I'm not so sure catalytic funders, whoever they may be, are necessarily looking at the social impact, right? So I've had to deliver 29x social returns, right? 29 times social returns for every rupee that was invested in us. And I don't think that that is necessarily what others are demanding, even when they're demanding financial returns. So I think that is a big metric difference. But metrics do exist. I think, yes, like Arvind was saying, we don't all come together and agree on them enough. It's something that we do with all of our donor partners, even when we're working in collaboration, is to agree on what the outcome is and what the impact is. And I think the big difference, like Himanshu was talking about, you will see outcomes in 3-5 years perhaps, but you're not going to see impact in that time frame. You are going to see impact, at least you're talking about social impact, only in a longer term. So you must be looking at 7, 10, 15-year horizons. And that is a dialogue that we have. And actually our relationships with our philanthropy partners are that long, because otherwise you're not seeing real impact at all.
No, thank you. And this is fascinating. I could keep going on, but sadly we have come to the end of the time we were allotted. So thank you, Himanshu, Shama, and Arvind, for an incredibly engaged conversation. And hopefully we'll be able to carry this on off stage. Thank you.
And so here we come to the final event of the day. We're going to wrap it up with a big bang. So what we're going to do is, there was a talk on continuum of capital. And while we talk about continuum of capital, I think we now need to start developing a viable impact investment thesis. And for that, we have Dr. Manish Diwan, Head of Strategic Partnership and Entrepreneurship Development at BIRAC. Sir, I would welcome you on the stage as the moderator. The discussion will be moderated between 3 panelists, 3 discussants. Shri Muralidharan, who's the founder and chairman of TMI Group, had some really good conversations with Sir on phone. This is the first time we are actually meeting face to face. And his thoughts on the entire impact investment piece. We have Pradeep Mittal, CEO of Great Force Systems and member of Hyderabad Angels. Again, we've had some pretty good interactions out there. And then we have Ajay Jain, co-founder and managing partner for Silver Needle Ventures. And so you have a variety of perspectives coming in. And I now leave the con to Dr. Manish Diwan to take this forward. Over to you, sir.
Thank you, Ambuj. And see, it's a little late in the day. People have been listening to the talks and the discussions right from the morning. What I can see at the back, some faces look familiar. How many are here who are startups or entrepreneurs? Great. Can I ask all of you to come a little bit forward? See, what we'll try and cover in this half-an-hour session is fundraising, of course, is very challenging by all the startups. They really struggle. From Virus perspective, we have supported nearly around 3,700 beneficiaries so far, and close to about 2,500 would be startups or entrepreneurs. And what we get a feedback from all of them that initial granting aid support that comes at the ideation stage or at the early stage by, let's say, BIRAC and other funding agencies, it's on merit of idea and it's fairly upfront. There's a 10% success rate, but it comes once you kind of stay engaged there. When it comes to raising funds from private sector, like private equity or private venture fund, that is where some people say that we have visited investors more than 200 plus times. Then we got first check. That was few years ago. I think the tractions are improving because the rigor and quality or maybe experience in the ecosystem has also improved. So fundraising by all perspective remains a challenging fact, and it has to be done stage-wise and increase in the quantum and continue raising it till a very, very long time. But for this particular session, we are looking at something called impact investments. So the friends who are here among the startups, can you give us a one-liner or a couple of liners? How do you differentiate between impact investor or a regular angel or venture fund? Anybody from the startup side? Go ahead. I'll pass on to my. Yeah, it's a smaller.
I'm Satya Kochivatla from Parishodhana Technologies. Having some first-hand experience on creating impact. The impact investment to general investment, the differentiation from my perspective would be, you're trying to balance out the lives impacted positively, which are probably in the relatively bottom of the pyramid, region of the economy, while you're also making profits as a venture. That's an impact investment from my perspective.
All right. Anybody else who is not working in that area? Any of the startup who is like regular deep tech or low tech, but not looking at impact investors or social innovation? Anyone? Then perhaps. All right. So the question then I'll put to my fellow panelists. Murli is an entrepreneur, built-in entrepreneur, seasoned entrepreneur. So can I ask Murli, maybe give us a brief introduction of yourself and also touch upon a fact that would it be easier for raising funds for a social impact compared to a regular innovative idea through startup or any business perspective? Over to you.
Good evening. My name is Muralidharan. I'm a serial entrepreneur, as he said. I passed out of IIT Madras, IIM Ahmedabad. I started 8 startups, 4 of them failed. And I think I've learned more from the failure than successes. And I think that's, Pradeep knows me well for a long time. And I've always believed that any business, whether it's social impact or a normal business, it has to be innovative. It has to be impactful. When you say impact, there could be 2 types of categories. Normally, we try to create impact on a customer. And that's how normal businesses run. When you talk about impact on the society, you don't look at them as customers, but you look at them as beneficiaries. I think this is the problem in my mindset. I believe that irrespective of who they are, they're all as good as customers. And therefore, whatever you supply, whatever you give, has to be top of the line. Now, the question is, how do you do that? Because you're saying bottom of the pyramid, there's no capacity to pay. How do you do that? And I think that's the question we are asking. And I want to tell you my own story. we are now a significantly large company. We started with 25,000 rupees capital. We lost that in the first business. And today, I think we are about 160, 170 crores. We have impact.
That's the TMI group.
Yeah, TMI group, yeah. Pan-India, we operate Pan-India, we work globally. But if you have to look at 3 or 4 important threads in our story, the first story is, whatever you do, you have to think you're competing with somebody the best in the world. Not somebody in India, somebody not in Hyderabad. So that's a mindset right from the beginning I got in my head. So I always used to think that whatever you do, how do you become relevant? Typically when you go to an MNC with large Indian houses, they're as knowledgeable as you are. So any product that we built has always been something better than what anybody has been able to give. Now I'm coming to the social aspect, which is important. I think the context is not a business enterprise, pure business enterprise. Right from the beginning, 30 years ago, we took a decision that we want to run a business, we want to make a surplus, but not at the cost of somebody. Typically, you can talk about extraordinary profit. Sometimes happen because of customer. Sometimes you are in the right time and the right place. Sometimes you are part of a crony crowd which gets access to licensing. If you remove all of this, then your real capability to operate a business at the lowest cost or a differentiator model comes only from constantly looking at technology, innovating, etc., etc. So what we did in social model, what we decided was our business is actually a business enterprise with a social mindset. We are just publishing, and 3 days for next Saturday, we are publishing our impact, what we have created in 30 years, impact brochure. We just took a stock and we found that we impacted 500,000 youth in India looking for jobs. We impacted 2 million people across India who have impacted in terms of social work, people who are Anganwadi workers, etc. And globally, we operate in 14 countries, especially developing world, in trying to build capacity for healthcare, capacity for education, and so on. Now, all of this we have done as a business, not as a CSR money, not as an impact fund. In my mind, this demarcation of investment or impact fund comes from the standpoint of some businesses take a longer time to mature, and therefore you need a longer runway, a longer duration to pay back the money, which makes sense to me, right? Sometimes the business is not viable in the first 10 years. It becomes viable after 10 years. How do you fund it for next 10 years? Sometimes we have a capacity to pay from some other business. So I want to close this by only one example of how to run a business enterprise with the same intensity, whether a social or a business enterprise, as LB Prasad in Hyderabad. I happened to listen to the promoter once in a CEO club conference, and I asked him this question. You claim, or they claim, that they're impacting millions of people in India, especially the poorest of the poor. And they have outreach programs which have impacted a lot of people. I said, what's your secret? What's your business model? How are you different? And he said only 2 things. He said, first and foremost, we want to be the best. If you're not the best, if you don't have a mindset of being the best, you can't attract the attention and the investment. So we do research, continuous innovation and research and eye care. And we get research grants from around the world. So a lot of our capital investments come from research grants. Now coming back to operating cost, obviously significant portion, 60%, 65% of people are poor. They don't get paid. They don't pay very marginal amount or zero. We do surgeries very low cost, but we do cross-subsidization. So he said, in his mind, and I picked up that idea, and even today we cross-subsidize our business with some high-paying customers, cross-subsidize low-paying customers. Ultimately, cross-subsidy. So you have to be viable. You have to create a surplus. You have to have the same intensity, whether it is a social enterprise or a business enterprise. You need a social mindset in business enterprise, and you need a business mindset in social enterprise, right? And the last most important thing I want to say is that when you engage with this audience, one has to get this mindset, they are beneficiaries. Somehow I don't like that word beneficiary. They are your customers. And therefore, Anganwadi workers we work with 1 million Anganwadi workers, providing them opportunity. But we treat them with the same sincerity and effort like a corporate employee whom we are also training. So I think that's a summary of what I want to say. Thank you.
I think wonderfully said, and bringing competence and value for whatever product you are delivering to whichever customer, that consistency. But I think what Murli also highlighted is that you can create, with your creativity, you can source funding from different elements, either cross subsidies, grants for R&D, for example, for LV Prasad, but delivering the output to the segment, which is equally competent to resource rich or resource low segment. Thanks, Murli, for that. I'll move with this to Pradeep, who has a long corporate background, but also have worked very closely to the social entrepreneurs and some businesses which have created a value and connect with the society. Maybe you can share some experiences from that perspective too.
Good afternoon, everyone. Thanks, Manish. Thanks, Murli. Thanks, Ajay. I have been in Hyderabad for last now 23, 24 years. I'm an IT professional, and I'm from Rajahmundry. And I ran a company so I'm an entrepreneur. I successfully created a company and sold the company. I've been involved with NGO for last 22 years. And for me, whenever I work with any NGO or any investment, if they talk about impact, I do get very excited. But as Murli said, if they're not sustainable, then we'll try to work with them to see how they can make them sustainable. I'll give some few examples of what I meant by that, where I'm involved. I'm very much involved in the startup ecosystem in Hyderabad. I'm involved with ISB D Labs, IIT Hyderabad in the startup ecosystem. I also teach at IIT Hyderabad in the entrepreneurship. So for me, there are two examples I'll give. One is I invested in a company called Dialogue in the Dark. So that was a completely social impact business model. So they were actually, when he came for investment to Hyderabad Angels, I'm part of Hyderabad Angels also. So I knew it was an impact investment. That was almost like 10, 12 years ago. And I knew that I may not get back the money. His returns was very low, less than, I think, low double digits. I told that's fine. Let's first become sustainable. So he probably raised many crores of rupees from the people around in Hyderabad. And he got some grants also from the government. He trained, skilled 3,000 people with disability, mostly with deaf and dumb. And he was running a restaurant called Dialogue in the Dark. And it is an amazing concept. Actually, he got a license from Germany. It is a German concept for those people. And he brought that license here. And he ran a restaurant in Hyderabad, Bangalore, Chennai. I think he tried in Bombay and few places. He was doing very well. He was actually profitable to a point. He hired 300 people whom he trained. We were very impressed by that. I took my team, my office team. I got many other corporates to visit the Dialogue in the Dark.
I think this came in media also.
Yeah, it came in the media,
I
yes.
remember
Yes.
seeing it on the media.
So it's amazing. He was trying to really go to the next level to create 15, 20 restaurants. Unfortunately, COVID came and he actually has to close down the operations and all that. But he almost ran it for 8 years very well. I'm part of another organization called Truth Labs. This is the only NGO in the country which does forensic services for common man. It started in year 2007 by Dr. Gandhi, who retired as a forensic head of the United Telangana Andhra state. And then he started this NGO. I've been part of that for the last 15 years. And he has been providing services to common man who cannot get forensic services easily from the government or from the police or wherever they have to go. And he's been providing to the government, to the police, to the judiciary, and a little bit of corporate. So there, they have somehow managed to sustain, though he has invested in capital. I also donated some money there and all like. We have done 15,000 cases. We are got 6 offices in India. It's very active. And we are around 45 employees, full-time employees. And it's able to pay its salaries, everything. It's sustaining. So right now, just Murli mentioned about LV Prasad. So I am again getting involved. They want me to get full-time involved. Probably by next year I may get more involved in the thing. To now create a corporate model where I can cross-subsidize the current NGO model and all that. Because if I don't cross-subsidize, this probably model after Dr. Gandhi will not sustain. So we are now trying to see how to sustain this model beyond Dr. Gandhi for next 10 years. But I will probably agree not agree, I 500% agree that you have to be best in your what you do. So Truth Labs gives one of the best forensic service in the country on par with the state labs. Even some of the NIA cases comes to the Truth Labs because of the speed of service and quality of service. And you have to have the same passion. I'm completely in sync that don't treat the people whom you're giving service as the beneficiaries are, I'm giving a low-cost service, treat them as a client, where you have to provide the same quality of service that you provide to anybody else in your business and all like. So for me, these are like very important aspect of it. And the good thing is that ISB in Hyderabad has been doing the social impact seminars for last 10 years since I'm aware of it. And many funds are now come in the impact space. There are, if you can Google them, there are at least 15, 20 funds in India, Avishkar, Acumen, there are like many more funds out there who are actually came very aggressively in agriculture, health, and education and all like. But for me, impact is of two kinds. One is impacting a human, like either developing his quality of life or skilling the person. Second is the environment. You're not destroying the environment, you're improving the environment by green technology or by recycling, by whatever ways people are doing out there. So I think I'm seeing a lot of startups and impact investment in both the sectors of improving the quality of the human and also the seeing the environmental balance of the how it should be done so that we stop. I can see a lot of, today you can see everywhere, the plastic spoons are going away. You're all seeing now the wooden spoons everywhere and all that. So you can see small, small changes. The plastic straws are going away. We are seeing paper straws coming everywhere and all that. So all these changes are happening, which will probably have an impact on the environment as we go over the years and all that. So anyway, thanks a lot. Thanks, Manish.
Thanks, Pradeep. I think you brought in the fact that different businesses, be it technical businesses, less technical businesses, can utilize funding. And the operations is one challenge, and CAPEX investments, as Murli mentioned, can be catered through different provisions. But I think the end of the matter is like a business is business, and quality and the rather than saying beneficiaries, the customers need to be brought the same quality of
I just want to add one more thing.
Anji.
How many people think that Amazon is a pure business model or it creates impact also? For me, Amazon has changed the life of people in the villages, in the remote parts of the country, by building the logistics everywhere. And Flipkart has done the same thing. Today, a small business, and someone mentioned in the earlier panel that they're from Assam in tier 4 town. You can order a stuff there. You can make, even you can make sweets today and sell it on the online today. All this is, for me, is a very massive impact. And the government has to play a very active role. And I'm happy that ONDC, Open Network of Digital Commerce, will create those impact at a grassroots level across the country and all like. The way UPI has done that, I'm hoping that ONDC will create the same kind of a impact.
I think that will really change the scenario in some terms. I want to touch one of the points that some business require low investments to begin with. For example, Parishodhana, the mask, they make cotton reusable masks, for example. Now you can create those masks with low capital investments, and it can still bring a social impact, a social value. Let's take another example. There is a company called Voxel Grid, who is making India's first MRI machine, and that is a technology advancement. MRI machines then can be placed anywhere in the building, not like at the being so heavy, need to be created space for the ground level, but it can be placed at first floor, second floor at will. Now the cost or funds required to build that technology and make it functional, it's very large. So let me ask this question to Ajay, who has recently launched a 100 crore fund under Silver Needles Ventures. So if you were to invest would you be prioritizing businesses which have social impact but low ticket size, within the low ticket size, or would you be willing to venture into some high bar technology-led businesses which can have similar or bigger social impact? But what's your discretion? How would you evaluate and make the final decision?
Sure, Manish. Yeah. Having run a startup in the education space, raised monies from Michael Susan Dell Foundation and Grey Matters Capital. My main differentiation on something like the double bottom line impact versus, let's say, what today I am doing as a VC fund is the metrics that are tracked, right? And my way of looking at things is these boundaries are not so tight as they are made to, and I think they should be not so tight also between impact investment and a regular investment. The only thing I feel is the efficiency that I see in the entire impact investment space is not as good as what happens in the VC space. And one can argue both ways on this. Coming back to the main question, our outlook at any startup is whether the startup will grow, right? And whether it will grow multiplying the money, right? So whether it is really having a great impact on the social sector or not is not the main thing. It is an outcome for me, which is great. But for me, the question is whether the startup will grow and whether it will have the ability to multiply the money, right? Especially from a Silver Needle Ventures perspective. What I did about 8-10 years ago, and I started looking at, okay, can I target the SEC DE classifications, right? Now that was a very different approach, and now if you ask me, that approach might be I was force-fitting something, right? I was force-fitting an approach of social, whereas I wanted higher efficiencies in my whole business. So I think that's something that we'll have to debate a little more to understand what's really happening in the social space.
All right. Okay, you want to add something? Go ahead, Murli.
I think the question you asked was, imagine you have a project which is high technology that requires high front-end investments. Impact investments may not come in to fund you at that stage because they need a sustainable business model, multiplier, whatever he talked about. We are not sure. And I'm doing exactly one project like this, so I want to share what I'm doing so you'll understand. I'm working on a project called Digital NIOS project, which is mainly aimed at the school dropouts in India. There are about 100+ million children out of school. And for every child in school, there's 1.25 children outside school right now. Because of COVID and other factors, these children have dropped out of school significantly. So we have said, okay, how do we develop a technical solution because these children cannot go to school? One, because they're engaged in work somewhere, and they also cannot, for example, girl child especially, if they have to travel and walk more than 1 kilometer to school, the parents are not allowing them to go. So you need to have a digital school. So right now, we have developed a business model, which is the cross-subsidy model with a front-end grant model. Right? On the front-end grant model is about 15 crores is required for us to invest for the first 6 years, and it will be self-sustaining based on the cross-subsidy model of people who are higher income children paying for the free children. These are all free, 70% of children are free. So when I started 15 crores, a large amount of money, where will I get it, right? So I've been hitting the ground with a lot of people, especially in CSR. You'll be surprised to know the amount of interest in CSR in this project is so high. We are now talking to 2 or 3 banks who are willing to put some money into this to create that upfront 15 crores of grant. And the backstory to this is, in the last 4 years, 5 years, I've raised 14 crores of grant for one of our IIM Ahmedabad Alumni Association. So my point is, when you have high investment front end, you cannot use debt. Debt is not an option because it will kill you. You cannot pay back. You cannot get equity investment because they will not see a value. The only option is grant, which is what LV Prasad's story is all about. If you see, originally, they got a lot of grant from around the world because they created something very unique. But the interesting point is, if you go with a business mindset and present it to them as a business mindset, right, then obviously people are willing to give you money. Sorry. People are willing to give you money at that time. So I strongly advise, if for a case like this, you have to take your bag, create a business proposal around it, and go with a sustainability model and hit the CSR budget. Obviously, you can't be a profit-making entity and ask for it. Obviously, it has to be a Section 8 company. But I think you can raise anywhere between 15, 30, 40 crores if you really got a very interesting project which is tested and viable. Of course, payment will come in installment. You don't need all the money up front, right? You need a commitment. So I'm of the view, money is available, especially for technology, as long as the cost per learner, in our case, the cost per learner is going to be less than 2,000 rupees per annum because of the digital technology and the methodology we're building. Money is available. It need not be impact, it need not be debt. The grant model is still alive.
All right. Okay. I think that's, we'll take that positive, one of the positive options, available options. I'm reaching out to Ajay and Pradeep again. So one is CSR, if you were wanting to raise fund for the impact investment. But if the startups want to raise funds, a follow-on fund, where you have already made some tractions or MVPs are there or early revenues are there, but you want to still scale and you still require, how would a startup identify a potential impact investor? Do these investors typically shine on their social media or wherever that we are open and we are willing to take this extra bite, a little bit of more patient capital or less IRR, etc. Is it as obvious as possible in black and white, or as Murli is saying that if you can convince with a viable plan and impactful projections, you can sell your business, you can make a pitch?
So I'll give my input from there, then I'll let Ajay add it to it. So I have come across many social enterprises in the last 10, 12 years, many in the education, in health, in agriculture and all that. And the funds are available. There's no question about that. The funds are available. There are a lot of HNI funds are available also. And they're not looking at any particular IRR that I should get 25% returns and all that. What they look at is whether this person can actually really do the business, whatever he is projecting there, and can he sustain, and can he scale? If he's only servicing like a small region or a small group, fund is not available. So the fund is available for the people who can sustain, who can scale, and who can really make it at least a value add to whomever they are touching the lives or environment and all that. I'll give a small example on that. Through ISB, I went for a startup panel in Delhi, and there were two students from IIT Delhi. They were selling, do you know what they were doing? They were actually removing stammering. The people who are stammering in the world, they are helping them to stop stammering. Stammering, exactly, you're right. I was there, right there. Moment they finished their present, and they were doing a great job because one of the students also was stammering. So he came up with an idea. So stammering can be fixed. It's like a tooth brushing your teeth every day in the morning. So you have to exercise every day in the morning in stammering. People are stammering for some time depending upon level of stammering. He already reached out to 200,000 people in the world. Some for free, some paying some money because he was touching every part of the world, Africa to USA to India and all like. And you won't believe it, the people who were sitting in the panel, including myself, were willing to write a check to him right there. But he never took the money because he got enough money from wherever he went earlier.
Some he got from Barak too.
So, okay, so you're aware of that. So I don't think there is a shortage of funds. It is probably the idea and the way they can scale and sustain the idea.
Ajay, you want to add something?
No, I agree. I don't see a dearth of funds at all, and I see there are a lot of people interested in the space. And even VCs are okay with the space, right? I think the only information asymmetry or the feeling that there is, as soon as it's a social impact space, might be people not look at it. I think the approach should be to get to the right people with the right pitch, right? Let's say if I am from a district in Rajasthan and I'm clear that I want to impact that district, right? So there is a need, right? And that I think some of the people have already solved. So I believe that approach has to be, that storytelling has to be right. I think the storytelling is most important in this space. Yeah.
Okay, so just to quickly summarize, CSR is one, HNI is another, another element, and you are saying that regular investors are also open for committing towards impact innovations. You want to
I just add, we just recently for one of our school project, we did crowdfunding. We raised 14 lakhs of rupees in 2 weeks through an intermediary in Bangalore. And it's all crowdfunded. But I would like to add one thing, apart from the idea, scale, sustainability, you ought to go, when you are going to raise money, you ought to come across as an expert. You can't be a novice. This is what I have a problem with most of the startups. Your passion is there, good, nice to know passion. Half the passion has come because you read somewhere, you spoke to somebody. In your case, stammering, there is somebody in your group who is part of stammering. But where is the expertise to scale up? You need to demonstrate expertise. So when I go in front of investors to raise money for, not for my company, I'm talking about NGO, which we are more part of it. They look at my face, look at what I have done for my company, whether I can scale up 1 billion users, 1 billion learners is my target for this project which I told you, 15 crores. Can he deliver 1 million numbers? That's the question. So I need to show data, I need to show research, I need to show my network which I have. So I'm presenting the entire Ahmedabad alumni network as my friend. And I go there, right? It's a question of storytelling. The story has to be told, but you also should be able to demonstrate that you have that expertise along with the passion to deliver.
I was actually withholding myself to put that question from a different perspective. So one is the startup's ability to position himself as a subject matter expertise and have the depth of the proposition that he is making. In the investor community, more often than not, we have seen that investors do not have that comfort zone of particular subject area. So regardless of the attractive propositions, they kind of hesitate. Am I committing to the right technology, right product or not? I'll give you an example. For instance, carbon net zero is a global issue. 2070 is what we have committed. We have committed to them. Europe has committed 2040, carbon net zero. Greener solutions aligned to this. Replacement of non-renewables like plastics, right? Replace the plastics with bioplastics, biodegradable solutions. Now, a startup who can bring up that solution, which is deep technology, but and the investor who has money. Now, the technical expertise is sometimes it becomes a roadblock, like the other person cannot communicate beyond they get stuck at the technology itself. So at that place, what could be the strategy? Like Ajay is raising hands, maybe he wants to say something.
Mostly when I evaluate startups, I look at the technology as a black box, right? For me, it's the business, right? So now, if you're not able to explain me why your business is doing good, then you're a technocrat and you might not be able to run the business, right? So it is important for you to be able to explain me, who has no knowledge of the technology, assuming, to be able to explain me and convince me that the business will do good. Right? So that's what I'm looking for. Actually, bridging the technology gap. For example, the last fund we did was with IIIT, and it was called IIIT Seed Fund, and the professors there sat for the AI/ML side of things. Right? So bridging that gap is not such a big issue. But for me to get convinced that the business will grow is where you will have to really impress upon me.
All right. I think that these are positive outlook in terms of fundraising, if anybody is interested. Any questions from the audience?
Manish, I have a question for you.
All right.
I'll probably reverse the role. Bayrak is doing an unbelievable role in the last, I don't know, 15, 20 years. I think you're
10 years.
And you are like one of the very key person doing like, you can see everything where you are sitting from in Delhi and all like. So can you tell us what is that from your perspective, from Bayrak perspective, how you have been made the change? I'll give one small example. I'm in the panel of IIT Hyderabad in the health fellowships. I saw one of the middle class, a dental, stopped his practice, became a fellow there for 9 months, became a startup, and now he has come with a device where he can do the camera. I forgot the name of the company. And Bayrak gave a grant of 50 lakhs. And he also got a seed fund from you guys.
Yes.
His name is Dr. Vikas Sahu.
Yes.
I saw the whole cycle in the last 4 years. It's unbelievable what IIT Hyderabad and what Bayrak has done together on this side.
So I think what we have been able to do it with the partners like IKP and other incubation network, the ensemble of partners, we have been able to make that impact for spurring the innovation, spurring or inculcating the culture of entrepreneurship in the country. And I think all organization, all colleagues put together, the policy, the support from Department of Biotechnology, who created Bayrak to begin with. So this has made a fundamental change, and this has gone through a lot of grant in aid to build that bottom of the pyramid of innovation, so as to say. So there is a sustained pipeline of entrepreneurs, startups now. Where I look this entire ecosystem is that the progression to the next level of even startups who have reached to the market, their ability to scale is limited due to follow-on funding, which is little less compared to, let's say, Europe or North American ecosystem. So Series A and beyond, there's a large void. So impact investments in certain social innovations or non-social innovations, but it can create a societal or global country level larger impacts. That is a much higher hurdle, right? So we are trying to build some models. I was telling Ajay, we have fund of funds to encourage private VCs to come forward, invest in biotech startups. We have launched Bio Angels, which also encourages HNIs, early stage investors, angels to come and utilize that platform to invest. And those are, I think, also avenues where the patient capital is there, because the syndicate investment de-risks the individual investments. Just like Murli was referring to, that so much fund could be generated within a short span of time. So angels can help in that matter. But I think the ecosystem, I'm very upbeat to the scale and size of India's ecosystem can achieve in next few years, or let's say a decade or so. We can become a very formidable contender in the space worldwide. And the problems are not limited to the geographies. COVID is one example, right? It kind of placed itself equally to all, developed as well as developing countries. So India's ecosystem could make an impact by providing COVID vaccines made in India, and $5 one dose vis-a-vis $25 one dose, and 1.6 billion people got immunized. So we potentially saved close to 40 billion USD dollars as an import substitution that we have done. But I think we need many such examples, and all the startups who are putting their efforts together for solving one particular challenge, they require a lot of support, funds, beyond funds, and I think as I think the topic of this panel discussion is how to support and how to find alternates, right? Direct VC funding, CSR, HNIs, angels, grants. I think there's a mix of this, and maybe strategic investments or catalytic investments, as Shama was referring to. So all these could actually pave way. So I didn't want to end it like this, but you made it. Any questions to the panel before we end? I think Ambuj is raising hands on the other side. Otherwise, I'll convey my regards and thanks to the panel on behalf of all of you. Thank you, Pradeep. Thank you, Murli. Thank you, Ajay.